we shall start right away. So first of all, I would want to share the question that I'll be using here. So the way I've explained, my good students, first of all, I would want to scribble down something. I don't start using Excel because some of you are not that great with Excel. So first, I will do this question on paper. On paper. So this is the question that we're doing here. Yeah, this question of tracker company. Tracker company. Tracker company. So tracker company. Tracker company. So you're told your tracker company plans to buy a new machine to meet expected demand for new products, product team. This machine will cost $250,000 and last for 4 years, at the end of which time it will be sold for $5,000. So of course I can see the initial cost, I can see the scrap value. So basically they're telling me to calculate depreciation. Tracker company expects the demand for product T to be as follows. You can see years 1 to 4, you can see the demanded units there. The selling price for product T is expected to be 12, and the variable cost is expected to be 7.8 per unit. Incremental annual fixed costs, $25,000 per year, will be incurred. Selling price and all costs are in current price terms. Selling price and the costs are expected to increase as follows. So we have here selling price will go up every year by 3%, variable cost up every year by 4%, fixed production overheads up every year by 6%. Tracker company has a real, this is very, very bad. Whenever given real cost of capital, we don't use a real cost of capital for discounting. We normally use what we call nominal. So anytime you see real cost of capital, your examiner wants you to get a 0. But fortunately, you guys are brighter than this. So whenever they give us real cost of capital, we must calculate nominal. So you calculate nominal using what we call the Fisher's equation. Fisher's equation. Actually, that should be your very first step. Fisher's equation. We know that nominal should be equal to 1 plus real into 1 plus inflation, general inflation, minus 1. Minus 1. Minus 1. So then to get my nominal, which I'll be using for discounting purposes, it will be 1 plus. The real cost of capital is given here. It is 0.057 like that. Into 1 plus the general inflation of which it will be given. Don't use these increases here. You're given here general inflation is expected to be 5%. I is general inflation. So then are you able to give me this N pretty fast, ladies and gentlemen, by saying there 1.057 times 1.005 minus 1, whatever you get, you give me an answer, my good students. Whatever you get, you shall give me an answer, my very good students. Anybody who is comfortably able to do that for me? Anybody who is comfortably able to do that for me? Any good ninja? Seems good ninjas nowadays are not there. Seems good ninjas nowadays are not there because they're not coming to me in great speed. So now I'm setting up my Excel. I'm setting up my Excel. I'm setting up my Excel. Sorry, it has led to some disruption, but we shall overcome. We shall overcome. Somebody is getting 10.25%. That is a lie. 10.25%, no. Yeah, 10.99, that one I buy. That one I buy. Please remember, you are taking there 1.057. 1.057 times 1.05 minus 1. minus 1. Once you do it that way, then we should be able to do what? To discuss business. We should be able to discuss business. They're getting 10.25. I don't know how they're getting 10.25 because the correct answer is supposed to be 10.99. Where do you think could this problem be coming from? 10.99 is correct. Please remember, use your brackets very nicely. Say open brackets 1.057 times 1.05. Whatever you get there minus what here? Whatever you get there minus 1. Yeah. Great. So, ladies and gentlemen, I suppose everybody now is comfortable with that 10 point what here. Everybody must be comfortable. Everybody must be comfortable with that 10 point something, right? Everybody shall be comfortable. Everybody now is comfortable with that. Yeah, thank you. So everybody is comfortable there with that 10 point something, right? Thank you so much. Thank you so much. Thank you so much. Thank you so much. Don't worry with what I'm trying to do. That should not scare you at all. I want to stop sharing here so that I can now get to share my Excel. My Excel. All right, very good. Very nice. I love this. I love this. Great. We are overcoming. Great. So now, ladies and gentlemen, remember what do we want to do here? They have given us this. Everything is given to us, right? And open another sheet here. Yeah. So basically, we're using this formula that our n equals into brackets 1 plus r, 1 plus r, close brackets, times. You know, in Excel, you must put a times in between, times, open brackets, 1 plus the general inflation, which I'll put as a small I. Yeah, and then whatever answer I will get, I will come and say minus who? Minus 1. All right. So remember, I have to begin with equals, So I say equals, open brackets, 1 plus 0.057, you close brackets, you say shift 8, that is 8 times, open brackets, 1 plus 0.05, like that, because then the inflation is 5%. Yeah. And then whatever, of course, I will get here, I will come and say minus what here? I will say minus 1. So what am I getting at the end of the day? I hope you're able to see I'm able to get 10.985. So basically, our COC, which is cost of capital, that we shall be able to use, my friends, here, will be what here? Will be 11%. That is the COC which I'll be able to use if I round off. So COC stands for what here? Cost of capital. COC stands for cost of capital. So all of us, have we been able to follow up to here? Yeah. All of us, have we been able to follow up to here? All of us, have we been able to follow up to here? Thank you so much. So that is the first step that I should be able to go through, my friends. The second step, the very second step that I should be able to tackle now, remember, they have told me here in this very question that if you look at this very question here, they have told us something very, very important. Very important. That there is what here, there is what we call, ladies and gentlemen, there is what we call what here? Taxation. So remember, whenever taxation is given, automatically depreciation is relevant. Depreciation is relevant. So if it's relevant, it means that it must be computed. It must be computed. It must be computed. This depreciation must be computed. So let's go ahead and compute this depreciation. They've told us that depreciation is going to be computed at the rate of 25%, reducing balance. 25%, reducing what here? Reducing balance. So abracadabra, ladies and gentlemen, what do I have at the end of the day here? Please listen and listen to me very well. Please listen. So remember, I'll come and do a working, second working, depreciation. So we have here. So 1, 2, 3, the machine has 4 years. Yeah. So I write a title here, depreciation. We start with year number 1. Year number 1, remember the machine cost us 250,000. We know that it is 25% per year, which we lose. We are losing this 25% per year. So is there somebody who is able to give me this number? So remember up here, ladies and gentlemen, if you are taking a screenshot of the question, it's important to take the screenshot now. Remember they told us, Tracker company plans to buy a new machine to meet expected demand for a new product T. This machine will cost 250,000 and will last for 4 years, at the end of which it will have 5,000 the scrap value. And then they told us down here that depreciation is 25% per annum, reducing what here? Reducing balance. Thank you very much, ladies and gentlemen. And I will be able to really, first of all, write here. So somebody giving me a figure of 62,500. We go to year number 2. So year number 2, remember this is reduced balance. Reduced balance, I will take 250,000 that I began with minus what I've lost in year 1. So whatever I will get times 25%. What figure do we have there? Whatever I will get times 25%. What figure do I have here now, my very good students? Remember, it's about reduced balance. It is all about reduced balance. So we have here Violet, my friend. I hope I've taught Violet before. Yeah, 46,875. Thanks, EW. Yeah, please ensure that you are really, really very active. Go to year number 3. So year number 3, I will pick the cost. I subtract what I lost in year 1, which was 62,500. I subtract what I lost in year 3, year 2, 46,875. So now I'm able to get the reduced balance. Remember, every year, I lose 25% every year. Every year, I'm losing 25%. So is there somebody who can really give me this figure? Anybody who is able to give me this figure? 35,156. Thanks, Shaz. 35,156 point something, right? Point something. 35,156 point something. How I wish it was everybody who was giving me these answers. How I wish it was everybody. 0.25. Thank you so much. Yeah. Then is there somebody who can go ahead and do for me the last year? Year number 4. Anybody who can go ahead and do for me the last year? Anybody who can go ahead and do for me the last year? Anybody who can go ahead and do for me the very last year? The very last year. It seems this Sunday class at this time, it may not be very, very viable. We'll have to discuss about which day do you think will I be able to get more than 300 students attending. So you see, Faith, Lena, and every other good-hearted person who is trying to assist Mwalimu here, the last year we can never apply the percentage. The last year we can never apply any percentage. If you remember very well, the last year we normally apply what we call a balancing charge. So the last year, you should come and give us here 250,000, where you began from, minus what you lost here. Thank you so much, EM, you're right. Minus what you lost in year 1, minus what you lost in year 2, minus what you've lost in year 3, 156.25. And then now lastly, because you're not applying the percentage, we subtract the scrap. We subtract the scrap value. Remember, the last year we don't apply percentage. If I ever get you applying a percentage in the last year, I will be able to punish you. You'll allow me to punish you. The last year, we get a balancing figure. The last year, we get a balancing figure. So is there somebody who can give me this figure? Anybody who can give me this figure? So you take the very original price minus what you lose in year 1, minus what you lose in year 2, minus what you lose in year 3, minus the scrap value. Never forget to subtract scrap value. So we have here 100 for 68 point something, isn't it? 0.8, like that. The other way round of getting year number 4, I'm so sure you guys are geniuses, only that you had forgotten a little bit. I'm so sure you had just forgotten a little bit, but you're geniuses. The other way that you can easily be able to handle this year number 4 is this. The year number 4, the balancing charge. You can as well come and handle it this way. You can as well come and handle it this way. So, you see, total depreciation, total value lost, the machine was worth 250,000. By the time they are scrapping it, it will be worth 5,000. So 250,000 minus 5,000, this gives me 245,000. So then ensure that this entire column. So come and give me the balancing figure here. How do you get this balancing figure? Because all 4 depreciations must add up to 245,000. So it will be 245,000 minus this, minus this, minus this. For those of you who are doing advanced taxation, I'm sure you understand what I'm talking about, what we normally study called balancing allowance, balancing charge. So is there somebody who is able to give me this balancing? The total depreciation is 245,000 minus this, minus this, minus this. You should be able to give me a figure. You should be able to give me a figure. Is there somebody who is getting that 100, 468.8, 100, eh? Yeah, like that. So, ladies and gentlemen, have we been able to learn something? Have we been able to learn something there? Have they been able to learn something there? Oh, yeah. Have they been able to learn something there? Thank you so much. So then, with your permission, this is what I want us to do. With your permission, this is what I want us to do. So remember, the way I teach BDA, I don't know whether I do it right. The way I teach BDA, normally, I do it on the board a little bit to connect with you, and then I come and do it in Excel. So depreciation working. So we have 1, 2, 3, 4, like that. So we start with the first year, which will be equals. You must always begin with the equals there. Yeah, so we know it is 0.25 times the original cost, which was 250,000. So then you have that 6,500. You go to the second year depreciation, I will talk of equals because there are many numbers, I must introduce bracket. Equals minus equals 250,000. What I began with, minus what I'm losing in year 1, eh? Yeah, I close bracket. Remember, you must say times 0.25, like that. You go to the third year, equals, you open brackets, you have 250,000. You say minus what you are losing in year 1, minus what you are losing in year 2. We close brackets here. We say times, ladies and gentlemen, 0.25. Remember, depreciation per annum is 25%. All right. So you go to the last year. The last year, ladies and gentlemen, the very last year, you'll be able to remember the balancing charge. So say equals 250,000. I don't even have to put bracket because I'm not going to use any percentage. Minus what I lose here, minus what I lose here, minus what I lose here, minus the 5,000 scrap value. You say equals. Ooh, where did I go wrong? There must be something that I did wrong here. Yeah, it's because this one is supposed to be 250,000. I used 25,000, so 0 there. Yeah, that is it. So once I have these depreciations, here, what I need to do pretty fast, ladies and gentlemen, is to come and use what we call, yeah, in this case here, come here and give us here what we call the depreciation tax shield, the DTS. Depreciation tax shield. Like that. Please write this in full. It's depreciation tax shield. All right. Now, ladies and gentlemen, remember how you're supposed to really do this. Remember, you're supposed to do this. If I come here, and first of all, I do it a little bit manually, this depreciation tax shield, if I come here and do it a little bit manually, for everybody just to be clear with this. So a little bit just manually here, remember how we fly home with this. So what I'm supposed to do, I'm supposed to come here and calculate the depreciation tax shield. Write in full. Tax shield. How do we get this? To get DTS, we normally take depreciation times what here? Tax. Times tax. So basically, ladies and gentlemen, you have your depreciations for the years. 1, 2, 3, 4. You have all of them, right? So like the first one is 62,500. You say times 30%. You already have this. You already have everything. Now yours is to simply multiply the depreciation that you have times 30%. And then you give me all the answers there pretty fast. Then we get to talk. All right, so is there anybody who has these answers? Now, ladies and gentlemen, given that I've been able to demonstrate there, I will come right away here and just do this on the screen. Thank you so much. Thank you, Rachel. Thank you so much. You guys are great. You guys are great. So remember, what are we doing? We are taking depreciation times the 30%. Yeah, so you come here, so you say equals, you pick depreciation for year 1, then you say times 30%. 30% is the same as 0.3. 30% is the same as 0.3. Then I do Control Enter. Once I've done Control Enter, I will come to this autofill. This autofill. So once I have the autofill, so you've got 2 pluses. To connect plus again in the hot air. Hot air. Hii inakuwa tu ya highlight, a very useless plus. And then we have this other plus, which is what here for the autofill. So this autofill, the one that is black one, just like a black rabbit. Once you reach it here and you want to autofill down, what you do is to come and there, hit this black rabbit with the 2 strokes of the key from behind. So in short, you double click. You double click and you'll be able to get these things coming. The other option is to come and say, once you see this plus black one, you scroll down like that. Yeah. Then you'll be able to get those figures like that. We call them depreciation tax shield. And remember, why have we calculated depreciation tax shield? We have calculated depreciation. First of all, we calculated depreciation. We calculated depreciation because tax is given. Tax is given. When tax is not given, depreciation is irrelevant. If tax is not provided, depreciation is irrelevant. Is irrelevant, meaning that it should not be calculated. It should not be calculated. Very good. Here we were given a tax rate of 30%. If depreciation was 0, then automatically the depreciation tax shield would have been 0 throughout. So no need for you to calculate this depreciation. And I would want to make myself very, very clear. And now I've become very serious. Now my speed has even gone a little bit high. Now I'm very, very serious. Don't write this down. I just want us to look at various scenarios where we have PBDT of say 10, Then they have given us here depreciation of 3. Then in this case here we have tax is 0%. Tax is 0%, actually just 0 like that. So here, if you are asked to give us what we call cash flows, you'll be surprised that the cash flow here will be exactly equal to PBDT. Exactly, sorry, I used, so this one here will be exactly equal to PBD. Just mention here the word equal. Will be equal to PBDT. Why is that the case, that our cash flow will be equal to PBDT? It is the case because tax is 0, and the tax being 0, it basically disqualifies depreciation. Depreciation will be irrelevant. Why is that the case, my mwalimu? That is the case because if I wanted to calculate this cash flow, PBDT, first of all, I go through it the longer way. PBDT is profit before depreciation and tax. So I'll use the longer way first, the lazy man's way. Lazy man's way, you'll come and say less depreciation. Yeah, so we have there minus what here? Minus 3. Because I'm subtracting. Then I will be able to get what we call PBT. So PBT, what do? I will come and add the 2. I'm adding because already this is negative, it's a cash outflow. So I'll come here and add the 2, so alt equals. Yeah, so I have there 7. So once I have PBT, I will now come and share this with the taxman. And sharing with the taxman 0, this is basically 0. Nothing. 0. So I have here the PAT. So we have here the PAT. Profit after taxation, which will bear witness with me that this will basically be 7 because I'm taking PBT minus tax of 0. Then once I've gotten this, how do I change PAT to cash flow? I will be able to come here and add back depreciation. What is the rate of depreciation here? It is 3. Now once I reach there, then I will be able to get what we call cash flow. I'll be able to get what we call cash flow. And our cash flow then, ladies and gentlemen, here will be 7 plus 3. 7 plus 3, you add back depreciation, 7 plus 3 will be 10. And this 10 is the same as PBDT. Please allow me to demonstrate something very, very important here. It cannot just go like that without me penning this down here using my hand. Now, ladies and gentlemen, please listen. I would want you to really understand this thing once and for all. This should never trouble you. I'm saying, if you're given here profit before depreciation and tax of 10, then depreciation equals what here? 3. Then the rate of tax equals what here? 0. Please, when you're looking for cash flow, for purpose of discounting, this cash flow, don't bother with it. Because if this is 0, then there is no shield we'll get. So this cash flow will be equal to PBDT, which will be 10. And with your permission, I'll be able to use, in this case here, method 2 to prove that I'm right. Remember the second method, we normally say PBDT. You less tax automatically, like that. And then you add depreciation, tax shield. 3 numbers only. This is what a smart person does. To get cash flow. Any smart person will get cash flow like this. Abracadabra, please listen. I will come here and say PBDT using this method is 10. Then we less tax out of it. Tax here is 0 times the 10. Because the rate of tax is 0, which will end up giving me 0. And then I come and add, in this case here, depreciation, tax, shield. Yes, I can see depreciation itself is 3. So pick 3 times tax. 3 times tax, which is 0. So 3 times 0, we are getting a 0 there. We're supposed to add this. So come and do your abracadabra. 10 minus 0 plus 0 is 10. So this is your cash flow. So, and this is the most important formula that I would want you to really appreciate from today moving forward. How to get cash flow. Because in finance, you can't discount profits. In finance, we can only discount cash flows. We can only discount cash flows. And how do we get cash flows, my friends? Please listen. Anytime you want to get cash flow, the format is you take PBDT like this, you less tax on it like that, and then you add depreciation tax shield like that. You'll be able to give us what we call the cash flow like that. Now, ladies and gentlemen, I would want to try you. I would want to try you. Please allow Mwalimu to try you. I want to try all of us. I want to try all of us. Exercise number 2. Very important. So here, you're given PBDT is 25. You are given rate of tax as 30%. Depreciation, you are given 10. You are needed to give us cash flow. Let me see whether there is anybody who will be able to give me this answer correctly from exercise number 2. Remember, I'm not doing my question. I simply want to bring it very clearly to everybody because I've always seen people struggling. I want to bring this very clearly to everybody, ladies and gentlemen, that depreciation only becomes relevant whenever you are given rate of taxation. It only becomes relevant whenever you are given a tax rate. See what some ninjas are saying. Some ninjas are telling me, Mwalimu, you know what? This answer is supposed to be 10.5. But Sarah, we have tax for sure. Here, tax is 30%. Unless I never wrote this very well. Tax is 30%. Yeah, we have EM saying 10.5. Then we have Viola saying 18.5. I will give the others a chance to talk to me. Shazi, 20.5. Masi, 20.5. Seems 20.5 is the one that is correct. Isiwani, 20.5. Lena, 20.5. Sarah O, 20.5. Julius Muredi, 20.5. It seems 20.5 is the real deal. Tulibatono Ismaili, 27.5. I like students who differ with others. I like them because they make us learn best. They make us learn best. So allow me to do it. So then this one, ladies and gentlemen, I will take PBDT, which is 25, right? 25. And then I less tax on it. So tax is 30%. So 30% is 30% of 25, which gives me what figure? %30 of 25 will give me 7.5. This I'm subtracting. And then I add depreciation tax shield. So this one I take 30% times the depreciation itself. Depreciation is 10. So this gives me 3. So that is it. So now you should be able to get cash flow. Joyce is giving me 20.5. Correct. 20.5. So we have learned something very, very important. Something very important. And I'm so sure all of you, you've picked the concept. Which concept have we picked here? The concept of no tax no depreciation. Just like some other movie, no retreat, no surrender, no tax, no depreciation. Thank you so much. Let's continue now with our question. Let's continue with our question. Now, ladies and gentlemen, please listen and listen to me very well. Because once you listen to me very well, then we shall never have any issues. Never shall we have any issues. All of us will be very comfortable with these arithmetics here. Now, ladies and gentlemen, we come back to our question here. Already we have our depreciation tax shield. So once we have depreciation tax shield, the next thing will be for us. No, Joyce, I want to teach you the smart way. Whatever you're giving me, Joyce, there is not a smart way. DTS is the smart thing to always do. I'll tell you why. But unless, Joyce, you tell me from today you guys have ceased to be smart, then I start teaching you the longer methods. Very good. Now, ladies and gentlemen, once you've been able to get the depreciation tax shield, we shall straight away go to the third step, which is what here? The cash flow step. So now we are going to the cash flow step. Cash flow, you can see they have given me demand, which is my X. You can see they have given me selling price, meaning that I'll be able to get revenue. I subtract all costs. So then very nicely, go ahead and give me the profit statement. Please go ahead and give me. I hope you'll be able to remember these figures. I already have them. Yeah, 35,000, 40,000, 50,000, 25,000. Yeah, and then we have in this case, yeah, nice things. Now, ladies and gentlemen, we are straight away doing this great stuff here. What are we doing here? So I'm doing a profit statement. So step number 3, give us a profit statement, which then will be able to allow us to do what here? To get, yeah, let me just come here, have another sheet. Fortunately, my book can take very many sheets there. No worries, let me just use this. Yep. So come here and give me profit statement. So my profit statement, ladies and gentlemen, remember our machine has got 4 years. 1, 2, 3. No. We don't want to skip any. Or if I've skipped this and I want to delete this row. If I want to delete this row number 7 that I've skipped by mistake, I will simply come and I highlight the whole of it, and then I say control minus. Whenever you want to grab any row or any column, you simply highlight the whole of it, assuming I have in this case here like say 5, like that. Yeah, and I don't want, for example, this row is in between here. I'll simply come and highlight. Once I highlight, I will simply come and say control, and then I subtract it from the face of this earth. Minus. I can highlight the 3 at once, but you see, most importantly for now, is you to simply appreciate. So come and give me 4 here. All right, so this is the year. From there, ladies and gentlemen, go ahead and give me the demand. So demand, so I want the demand figures. I hope somebody can read them for me. Is there somebody who's able to remember those demand figures for us? Anybody who was able to screenshot? Give me the demand figures for, yeah. Mm-hmm. 35,000. Thank you so much. 35,000. So we have here 35,000, 40,000, 40,000, The third one, 25,000. The fifth one, 50,000. Very good. Now, ladies and gentlemen, after that, I can see selling price. Are you able to see the selling price over here? Are you able to see the selling price over here? What selling price are they giving me? Selling price. I can't see your numbers. 12 bob. So selling price is 12 bob. You know why I'm writing this like in a very, very bad way? I'm writing this in a very bad way because I know that this 12 is not coming at year 1. This 12 is coming at year 0. 12 is coming at year 0. Mwalimu, how do you know that? I'll be able to tell you why I'm putting that 12 in a very awkward place. How I wish today you guys would listen to me. But I know most of you listened to me from ATD and you passed. Now you listen to me even better because now we are at the very last stage. We are told the selling price for product T is expected to be 12. And the variable cost is expected to be what here? 7.8. And then we have fixed cost, which is expected to be 25. Selling price and the costs are all in current price what year terms. Current means time 0. Current means time what year? We are interchanged. 35, 40, 50, 25. We interchanged. We interchanged. We interchanged. Thank you so much. Thank you so much. We did an interchange. We did an interchange here, which was very wrong. Let me correct this. Let me correct this first, because we must get everything all right. So this is supposed to be 50,000. Even this one I've written wrongly. I've written even this wrongly. 50,000, and then this one here is 25,000. Like that. Great. Thank you very much. So you see, ladies and gentlemen, this selling price is at time 0 here. Now I want to get selling price at the end of year 1. Have they given me the growth rates of selling price? Selling price is supposed to be growing at what percentage? Selling price is supposed to be growing at what percentage? Boy, they are not talking to me. Is it 3%? 3%. So this is supposed to be growing at 3%. So then come here and they say equals, you pick this 12. And then you say times 1.03 for the growth to be there. 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 Allow me to, ladies and gentlemen, allow me to come here and do this thing manually. Allow me to come here and do this thing manually. Manually, you'll be able to see it much better, what I'm talking about. So manually, you'll be able to see this much better. Much better. You see, what they have told us here, ladies and gentlemen, is that selling price will be growing at 3% per annum. Will be growing at 3% per annum. And the current selling price here is 12. So current means what here? Time 0. Time 0. So time 0, we are saying in this case here, price is 12. Then we have year 1, year 2, year 3, year 4. So meaning that year 1, it will be 12 times 1.03. Is there somebody who can easily give me this answer? Anybody who can give me this answer, please? Even if you've done it using Excel, please just read it for me again. 12 times 1.03. What do we have there? 3%. I'm being 3C. 12.36. Thank you so much. You are really great people. You are great people, that I can assure you. Then we go to year number 2. It will be 12.36. I have it growing again times 1.03. I have this growing again times 12.36 times 1.03, which will end up, ladies and gentlemen, giving me what figure? Alfred, 12.73. Like that, isn't it? Then we continue like that. When I go to year number 3, I will take 12.73. The growth rate of selling price is ever constant. The growth rate of selling price is ever constant, which gives me, I'm being told 13.11. I'm being told 13.11. Now, ladies and gentlemen, please now, I don't even have to do the last one. I think with that, I've been able to make a very important demonstration, which will be able now to help us make the next move, make the next move. So abracadabra, my very good students, please listen and listen to me very well. I don't have to do the last one, thank you. I don't have to do the last one, thank you. Thank you very much. For me, what I've done, I've come here and I did this one alone. Yeah, what I've done, I've come here, if I delete this, yeah, I've come here and I said equals. I picked the first one, shift times 1.03. All right. So I don't even want to start teaching you the concept of fixing. Actually, for me, I don't fix those numbers very easily because you'll tell me that Mwalimu, this 3% is constant fix. I can do without it. Most students are not able to remember even that fixing in an exam. So once I just connect the two, and I've been able to say Control Enter, I'll be able to come and out of field. Out of field, put the rabbit here to be black. It's an angry black rabbit. You have to beat it from behind. 2 strokes of the cane. Meaning that you double click, ta-ta, you get this thing very, very easily. You get this thing very easily. So up to there, ladies and gentlemen, are we really together? Somebody up to there. Are we really together? All right. Not many are giving me a response. Thank you so much. So go ahead and do the same for variable cost. Go ahead and do the same for variable cost. So variable cost, is there anybody who is able to see the variable cost given there at time 0? Anybody who is able to see the variable cost at time 0? So remember, these are time 0, yeah. So 7.8. And they have told me that variable cost will be growing at what percentage? Are you able to see the growth rate of variable cost? 4%. So what I will do, I'll come and say equals, I pick this 7.8, I say times 1.04. All right, Control Enter, and then I come and beat this twice, ta-ta, like that. That's variable cost. I'm through with it. I go to the next one, which is what here, fixed cost. Fixed cost. So fixed cost, the first current year, they gave me 25,000. Yeah. And the fixed cost is expected to grow at what percentage every year, my good students? Fixed cost is expected to grow every year by what percentage? 6%. So you come here and they say equals, you pick this 25%, or 25,000, sorry, times 1.06, which they've given me, 1.06, like that. Then I Control Enter. You see Control Enter, ladies and gentlemen, when you use Control Enter, if let me just demonstrate something here. Let me demonstrate something here. My very good students, especially if you are a student of football, and if you are an Arsenal supporter, there are things you know better. Yeah. You see, like in Excel, ladies and gentlemen, when you are moving to down here 2 cells, yeah, you want to move here from A maybe to B. When you finish typing here and you want to go B here, you simply press enter, enter. But you see, when you press enter just alone, the cursor goes here. But you see, at times in this case, you would want to play with the ball at the middle of your, you don't want this ball to get outside the cell. Yeah. You don't want this ball to get outside the cell here. So in this case, you do a controlled enter, like a pass. You simply want to pass this ball to yourself, and you're simply moving the ball from one leg to another. So you do, in this case here, a control what here? A control enter. You're controlling the ball. You do a control enter. You do a control enter. You get to do a control enter. So when we talk of control enter, what do we really mean? When we talk of control enter, what do we really mean? Please listen, and listen to me very well. Listen, and listen to me very well. You'll overcome. You'll overcome. You will overcome. Now, my best friends, please listen. When I'm here, all right? So when I'm here, I will come here, let me repeat this. Control Z to undo. To undo is Control Z. So I will say equals 25,000 times 1.06. 1.06. So if I was to say enter alone, I will move down one cell and then I start coming back again. Why should I do that? I should not do that at all. If I'm really a support of a good team, I know what I need to do is to control the ball. So come and pick these. You say times 1.06 like that. Control enter, because I want the same cell highlighted. Once it is highlighted like that, we come and talk about what here, out of field like that. Now, ladies and gentlemen, I want you to come here. No, I would want to elongate this, make this a bit broader. So come here and give me what I call PBDT, profit before depreciation and tax. How do I get this? Remember what I will do? I will take open brackets here, right? I take selling price minus variable cost. You close, you say times quantity, which is our X. Quantity is our X. Quantity is our X. You say minus fixed costs. Minus fixed costs. I'm so sure these are formulas everybody knows. These are formulas that everybody knows. And remember, we are not interested. This row is a useless row. This row is basically like a, it's a times zero thing. For us, we want future profits for future cash flows, so they're going to get to discount them. So I will come here and they say equals. I open brackets. I'm following this. The selling price is this 12.36. From year one, henceforth, future profits, future cash flows. We're interested in the current cash flows. So we say minus the variable cost for this one is this one here. I close bracket. I say times, ladies and gentlemen, the demand. The demand, you see this demand is my X, is the quantity. X is the quantity. So you say times this one here. And then you come and say minus, now the fixed cost for year one. Everything is like that. And then you do it nicely, Control Enter. Once you get this, ladies and gentlemen, simply come here and hit the button. Yeah. And then you'll be able to get, in this case here, your profits downwards. Your profits downwards, like that. Your profit downwards, like that. I don't know whether there's somebody who has been able to reach here. I don't know whether there's anybody who has been able to reach here. The most important thing, but even if you tried, you see, even if you tried getting profit for times zero, there's no even demand for times zero. No demand for times zero. These guys are not talking to me. I don't know whether they want us to really continue with this class. I don't know. I don't know where they want us to continue this class. Because if they want us to continue the class, they should ask either questions or they tell me, Mwalimu, yeah, let me see. They're saying yes. Thank you so much. Now, my very good students, please listen and listen to me very well. Once we get these, what are we supposed to come and do? Once we get these, what you're supposed to come and do immediately is to compute taxation. Yeah, so come here and pay tax. So is there somebody who knows tax? Tax should be at what rate? Yeah, tax should be at what rate? I don't need this column. Sorry. Let me just come and write here. Let me make this a bit, yeah, like this. Yeah, and then I should write here. I should not miss any. So we tax this. And taxing this, my very good students, when you are taxing these, remember, tax is being paid 1 year in arrears. Tax of year 1 will be paid in year 2. So don't start getting tax here. Tax will be here. So you come and say equals. I will say minus this figure times 0.3. 30%. Yeah. So that the tax I'll pay in year 2, because they're normally staggered. We are told that this tax will be paid 1 year in arrears. 1 year in arrears. It will be paid 1 year in arrears. 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 In arrears. 1 year in arrears. Will be paid 1 year in arrears. Let me see this. What did it do here? So here it took I7. Nope. No worries. Control Z, that is a very good thing. So equals. So we have this I5 times 30%. So first of all, ladies and gentlemen, in this very case, see how you are able to get your taxes. See how you are able to get your taxes for each year. And if you're keen enough, I've introduced the 5th year. I have introduced the 5th year. So this is I8, yeah, times 0.3. Why am I introducing this 5th year? Allow me to reshare my original document. Allow me to reshare my original document here. So let me stop sharing these here. The moment you understand this, ladies and gentlemen, then you have understood the entire thing, which will really make all of us very happy, very happy, very, very happy, which will make all of us very happy. So you can see here, Tracker Company has a real cost of capital of 5.7% and it pays tax at an annual rate of 30%, 1 year in arrears. 1 year in arrears. So tax is being paid 1 year in arrears. Tax is being paid 1 year in arrears. So meaning that tax for year 1, my good students, will be paid in year 2. Tax for year 1 will be paid in year 2. Tax in year 1 will be paid in year 2. So if you wish, you can capture this because it's a cash outflow. You can capture this as what year? As a negative, or just leave it like that. Leave it like that. Now, after taxing, please don't forget your depreciation tax shield. Don't forget that. Are you able to remember your figures, ladies and gentlemen, for depreciation tax shield? Are you able to remember them? Remember, we got them here. So I'll come and say equals. We got them somewhere. We got them somewhere. Was it here? Oh, I think I rubbed. It is in this other sheet. Where did I take them? Where did I take them? Yeah, they're here. They're here. So I'll be able to come and pick them. Once I've been able to pick these, yeah, I'll be able to come and pull the others down. And if you're careful, you see, this depletion tax shield will also be 1 year in array, will also be 1 year in arrears. The depletion tax shield will also be 1 year in arrears, meaning that the depletion tax shield for year 1 is what I've brought to year number 2. All right. And how have I done this? What I've done, Control Z. I simply went and, I declared this. So if I declared this, I will simply go to where they are found and pick the first one. This is the first one. Once I say Control Enter, you see now I'm here. Yeah, I'll simply come and drag this out, fill this down. It's able to fetch for me. That is a beautiful thing with this Excel. And then now I will be able to come here and get what we call the operational cash flows. I get what we call operational cash flows. So how do we get these operational cash flows from year number 1? So from year number 1, I will pick here the PBDT. I say minus the tax, which is 0 here. I'm just putting it up for my formula. Plus the depletion tax shield like that. So those are the operational cash flows. Then I'll be able to say Control Enter. Once I have that, I'll be able to come and autofill all this. I will autofill all this down like that. So I don't know whether we have anybody who has been able to get these figures the way I have them here. Because if you come, for example, here, what basically they have done, they have taken this, which is 0. Yeah, subtracted this plus this 30,000. So do we have anybody who has been able to reach here by good luck? By good luck. I'm just praying that there is somebody who has been able to reach here by good luck. What do we have there? Oh, but those yeses are very, very few. Now, once you get these operational cash flows, what do you think will be the next thing to be done? Once you get the operational cash flows, what do you think will be the next thing to be done? Thank you, 𝗓𝗓𝗓𝗓. What do you think will be the next thing to be done? Don't discount them, no. We still have TCs. We have terminal cash flows. So come here and give me the terminal cash flows. Is there somebody who can remind me examples of terminal cash flows? Which you can remember, terminal cash flows that you guys can remember, examples of terminal cash flows. Can I tell you one of them? Yes, residual and working capital, salvage value. So like in this case here, we have a salvage value over how much? Or a scrap value over how much? Scrap value over how much? They are not talking to me. 5,000. Thank you so much. When am I going to receive this 5,000? When will I receive this 5,000? When will I receive the 5,000? At the end, what is the end? Tell me the end period. 5th year, no. SU1 5th year was brought because of the staggered nature of what year, somebody? The tax. At the end of year 4. Our project is supposed to end in year 4. Year 5 came because of what year? The tax, which is payable 1 year in arrears. You can now see Joyce now has gone to the 6th year. Joyce. We shall overcome, Joyce. This project had a span of 4 years. We only talked over a 5th year coming, a 5th year being born because of what year taxes, but thanks for trying. So we are going to receive this money. We shall receive this money on the 4th year, 5,000 here. So, and we don't have, ladies and gentlemen, ladies and gentlemen, we don't have any other terminal. We don't have working capital here. So before I answer that, Ninja, so now we happen to be having, my good students, we happen to be having what here? These terminal cash flows. Now come and create a column here where you give us, create a column here where you give us what here? Create a column where you shall be able to give us what we call the total cash flows. So come here and create total cash flows for us. Total cash flows. So total cash flows like that. So how do we get these total cash flows? Well, it's very easy. To get these total cash flows, you come here from year one, remember. You will take here the operational cash flows plus the terminal cash flow, which is 0, of course. I'm simply putting it like that for purpose of the formula. So when I enter, I'll be able to come and pull. You'll see this becoming 37. So I'll be able to come here and simply pull this down. Pull it down like that. Yeah. Now, ladies and gentlemen, have they given me the cost of capital that I'm supposed to use for purpose of discounting? Have they given me the cost of capital which I'm supposed to be using for purpose of discounting? It is the one that we computed with yourselves and got 11%. Remember our COGS, remember, nope, Control Z. Yeah, our COGS was 11%. Our COGS was 11%. So then we need to come here and give our examiner net present value. So how do we get this net present value? Equals NPV. We have it. You can see it is here. Yeah, the rate. So pick the rate, which is 11%. You say comma. All right. And then you can see they want us to pick from value 1. We don't have value 0 here. That's why normally cash flows for value 0. There is a mistake I've done, but we shall overcome. We shall overcome. So when you come to value 1, value 2, you simply highlight all this. You simply highlight all this. And then you come and close brackets. Yeah. And then you say minus the initial outlay. Is there somebody who can be remembering our initial outlay? Anybody who is able to remember the initial outlay? How much was the initial outlay? How much was the initial outlay? Please talk to me. It was only the cost of the machine, which was 250,000, yes. Only that. Then you should be able to enter here. You can see we are getting quite a huge figure there. If you open up like this, it's supposed to be, I can see it's coming in form of percentage. I will never worry. Never ever worry. It is a cell which has been programmed to come in form of what here? Percentage like that. But that can never scare me. Look at here. It's coming in form of percentage at home here. So I'll simply come and there, click there. Yeah. And then I say, I want just the number or just no specific format. Yeah. So it gives me this 106 something. I can come and put a separator. Yeah. 106,394, which is positive NPV. Positive NPV. Positive NPV. Meaning what is that the project is very viable. The project is very viable. The project is very, very viable. And that is the final answer to this question. It has been a pleasure, ladies and gentlemen. It has been a real pleasure. Somebody had asked here, how are we getting this operational cash flow? Remember, I gave you the formula for getting operational cash flow. We said you take PPDT, yeah, you less what here? You less tax, this is what we said. And then you add a depreciation tax shield, like that. So we took this one here, we took this PPDT minus taxation here, plus, yeah, this one here. And then we were able to copy the formula down very nicely, like that. We're able to copy down the formula very nicely, very nicely. And it is my belief, ladies and gentlemen, that as you get outside this very session, You are not going home empty-handed. Even if it has been a little bit tough, I'm 100% sure that you guys have gotten something. Yeah, if you had working capital at the beginning of this project, it would have formed part of your initial outlay and a part of your terminal cash flows. I'll be able to do that kind of a question for you later. One where we have this one here. Good question. Why is DTS starting from year 2? Can somebody help me answer this, great lady? Why is DTS starting from year 2? It's because of what year? Tax being paid in arrears. Because tax is paid in arrears. Tax of year 1 paid in year 2. So that is when you can also claim your benefit. You can only claim your benefit, which should be in line with the policy of the taxman. The policy of the taxman, which is very, very good. Now, I'm finding these Sunday classes not to be very appealing to you. I thought they would be very appealing. I thought this time is very, very ideal for everybody. Yeah. Do we have to change the day? Do we look for a different day when we can get most of the students attending? EW says it's ideal. You know, when you look at early morning and evening, we are looking at 300, actually 400 plus students. The day is okay. I also thought so that I should come here. And I won't be pushing you a lot. I don't even want to do it for 2 hours. Okay, EPL finals. I don't even want to do it for 2 hours. Actually, on Sundays is my only rest day that I have, which I should be able to stay at home and get to play with my kids a little bit. So I just wanted to be giving like okay, yeah. So if we can just meet for 1.5 hours, it will be a game changer for all of you. It will be a game changer for all of you. Trust you me. If I come every Sunday for 1 hour, 1.5 hours, all of us will be very, very happy. So then it is upon you, great students of mine, to get and convince your fellow students so that by next session they should be able to, say no to football. Yeah. Where do we get these videos? I will start uploading them. Okay. The person is not responded to, I don't know. 0793 555 000. 0793 555 000. Call them. Or if you're not able to get them, then you can get now to me. 0721 620 183. 0721 620 183. Otherwise, much love from this CPA Chief Ninja to yourselves. Make sure that you bring so many students to RCM to come and do what here? To come and do BD at RCM. Japhet, yeah, I'll check immediately after this. Otherwise, thank you so much. Bye-bye. Bye.